If there was one sector that took a direct hit for the 16-month period during which the now abandoned exchange rate peg lasted, it was the Nigerian capital market. It suffered an unprecedented capital flight, with mostly foreign investors pulling away in droves with uncertainty over the old forex regime. But it's here that the positive signals of the new exchange rate policy are beginning to shine through. For the 1 week that the new policy has gone into operation, the market has been on a sustained bullish run never seen for over a year now. Virtually all the indices have been in positive territories, with a consistent rise in both the market capitalization and the all-share index. It's a development that is getting both regulators and players excited.
We are very encouraged by the recent moves that have been made by the central bank with regards to introducing flexibility in the FX regime, and investors have voted with their money. We're seeing a lot more activity in the last one week at the exchange. So we're hoping that we'll be able to make up for lost time given the challenging period we've gone through in the recent past.
With this economic policy or monetary policy, I think this will attract more and more investment, not only foreign, but at the same time, domestic investors who have left the market before, confidence will build. And we are seeing that the market is trying to regain all what it has lost over. For today, you see that we have the market is positive. Year to date is positive, which tells us that confidence from the investors is increasing.
For now, the foreign investors who exited the market are not back, but analysts say in a very short while, the story would change. As at September 2013, foreigners held around $5.4 billion of Nigerian bonds, but most of the bondholders dumped them after the country was ejected from the JP Morgan's Emerging Market Index in the thick of the old exchange rate regime. Some are already talking of the relisting of Nigeria on the index.
If we go back to the reason why JP Morgan kicked us out of their index, I think they made mention of 3 critical points, which include basically the liquidity, the transparency, and the operation of the Nigerian FX market.
Meanwhile, the smiles are returning for investors on the Nigerian Stock Exchange. They have continued to enjoy price appreciation since the commencement of the new forex policy. They gained around $1.2 billion on Thursday's transaction alone. They would sure be hoping things continue in that trajectory. The government would also want things to continue along that line, and most importantly, that this economy rebounds for good. Deji Badmo, CCTV, Lagos, Nigeria.